Welcome back. Let's focus on the deal street and on the deal tracker segment. Today we have with us Prashant Mehra, who's the partner at Grant Thornton Bharat, joining us now. They've authored a detailed piece on Q2 transactions. Now, Prashant, very quickly, the key highlights on where the deal street is headed at the moment. Of course, we had a big event like the election results, which also had put a little bit of a slowdown on this particular street. But now we have the budget to look out for. How is corporate India as well as private equity looking in terms of conversions in deals?
Hi, thank you for having me once again. I think as you rightly put, the quarter has seen very impressive growth, especially if we relatively compare it to last year. But I think it's been still subdued because there was an overhang of the elections which were scheduled in June. So I think, that continuation and political stability has only been validated, and we will see even further growth. I mean, specifically, if you see, the large part of the growth that has come from and the activity has really been around domestic consolidation and domestic M&A, which shows to prove that the large corporates continue to believe in the brand India and are thus investing even more and more in domestic companies and moving towards consolidation and strategic acquisitions. But I think the other part of transactions, which is really inbound and outbound, hasn't seen much growth, and I think that's really what will show even further traction in the next quarter or two. As far as private equity is concerned, I mean, we all know they were sitting on a lot of dry powder. Uh, uh, the valuations have come down. I would say, they are more reasonable. The value per transaction or the funding per transaction has come down. So while the volume has increased, the value has not increased as much. But I think that
Yes.
that's quite reasonable, and we were expecting that, and we will see even further private equity coming in, especially private equities, backing mid-cap and high growth companies on, again, domestic consolidations and strategic acquisitions.
But Prashant, with equity markets really running high, that doesn't augur well for the deal street as well as the conversions, because a lot of talks which earlier started are now becoming obsolete because of the change in the valuations in the public market, and that also has a serious impact on the private market transactions. So deal conversions have been slow, especially in healthcare. We have seen 3 large transactions. One went into cold storage and the other 2 are going very slow. What is your view on deal conversions and the impact of equity market valuations on the deal conversions?
I think there are two things here. If we look at the IPO markets, which is the obvious exit point for any investor, the IPO markets are back again, but with a slight difference. We are seeing fewer IPOs, but with very successful IPOs, and these are large IPOs. And I think that's the trend that will continue. The market's kind of giving the message that we only want large and strong companies which are looking at that next level of growth and not really mid market and dynamic growth companies as such. And I think that opens up a whole plethora of field for these mid-market companies and high growth companies to be funded and backed by alternate capital, which is private equity, to grow further in terms of M&A and inorganic growth within the domestic market. In fact, even look at transactions overseas. Valuations have to be reasonable because you always need to leave something for the markets to absorb once it is listed. But I think it's kind of an evolution which I see a more positive outlook. The mid-market transactions will increase, and IPOs will only be on high growth and matured companies as such with a large base.
That's right, Prashant. You mentioned IPOs. So block deals, IPOs are, something that have been in vogue on the deal street more. And that also gives a sense that private equity as well as venture capital is more on exit mode when it comes to large transactions. How do you see it from now on?
Yeah, I think the sectors will really play out. In the last quarter, we've seen some activity around manufacturing, retail, and I think that activity will only increase. We were only talking about the evergreen sectors, which is technology, healthcare, but investments coming into infrastructure as such. I mean, we've had some very large transactions there. Investments coming into retail, investments coming into pharma. That really shows that there is a 360-degree growth aspiration that investors and transaction makers have, and it gives them even further confidence in the brand India. I think the next quarter or two will be good to watch out for. I personally expect that once this political stability has been validated, we will definitely see a lot of inbound and outbound traction, which should really be the flavor of the season for H2 of 2024.
So, Prashant, the final question from my end, where is action picking up? Of course, we saw one big coup from Ultratech in the cement sector for India Cements, and there's a lot of competition in cement acquisitions. That sector is buzzing. Which are the top picks when it comes to sectoral play, which is going to see maximum amount of deal flow, according to you at this point?
I mean, I wouldn't mention the usual suspects, which is really, technology as such, but I would see a lot of traction in the consumer sector as such, whether it is retail or whether it is services. The other sector that I would pick is banking and finance, because whenever markets are up or markets are down, that's one sector that always shows some traction. And I think the third would be infrastructure. So infrastructure, banking and finance, and retail would be my three picks.
All right. So those are the few sectors. Of course, there is intense M&A competition that will pick up amongst the conglomerates is what we see, Prashant. And the VCs and private equity continue with their stake sale if equity market is really revving up at this point. So they're taking this particular opportunity. But great speaking to you as always, and speak to you next month again on the top deal trends, and hopefully post the budget, things would be clearer. Thank you so much for joining us right here on CNBC TV18. With that, we'll slip into a short breather, but come back for more news and updates and market action on the other side.